Good morning and welcome to this weekly market update by AGM Markets. Today is the 17th of September 2012. What I'm going to be doing today is going through a few of the forex pairs. We'll go through Euro Dollar, Cable, Dollar Swiss and Dollar Yen. Just trying to give some sort of weekly outlook into the markets, and we'll also have a little look at what happened last week. Purely based on a technical analysis perspective. We'll not be making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. For any new followers out there, we have 3 moving averages on each of these charts. The red one is a 55 simple, 100 is the purple is 100 simple moving average, and the gold is a 200 simple moving average. Okay, let's have a look at the Euro Dollar chart. This is the weekly. As you can see, last week, very bullish candle continuing on from the previous sort of 4 weeks of just pure green bullish candles. Looks like we are starting to form some sort of uptrend, or is it just a retracement? That's the tricky thing. But now you can see we're above, or I mean, in terms of the weekly, we won't spend too much time on the weekly, but we are above this 55-week moving average. We've now in a solid weekly candlestick close above this. So the next target will be the 100-week moving average. For some reason, it's not showing the 200-week moving average on it. Oh, it's because the data doesn't go that far back. That's why. So yeah, in terms of this weekly chart, very bullish indeed. In terms of a sort of outlook for this week, you'd say, I mean, after 5 consecutive weekly candles, do not be surprised if we have some sort of correction this week. Even if it's just a slight pullback for the first few days, we could get a bounce off of this 55-week moving average. I mean, in terms of this candle patterns, we do have a bit of wick on the top of this, but after sort of 5 consecutive weekly candles, the odds are surely for a red candle to come in. So it'll be interesting next week. But it means, in terms of the weekly, in terms of the overall picture, it is starting to look very bullish now. I mean, I think we've spoken about this before on, I know we can't get that data up on monthly. So yeah, weekly very bullish, but would not be surprised this week if we got some sort of pullback to that 55-week moving average. In terms of the daily chart, we did have this trendline resistance from the highs there, down there, and we've now firmly broken above this trendline resistance. We spoke about a couple of weeks back, because of course I haven't done a video for a couple of weeks because I've been on holiday. We said it's all about this trendline resistance, and we've now broken above that, and we've come back down here, and it did sort of bounce off of this trendline resistance, now acted as support. We're now also above the 200-day moving average. In terms of the fib setups, what we're looking for now is, I mean, for any sellers who are looking to sell this pair, the first fib of interest would be from that recent swing high there, and we're now starting to break above all these points. We can see we are starting to stall at the 78.6 level, which is at around 1.3175. So that's the first area of resistance there. In terms of the bigger fib, from the high of the chart to the lows, you can now see we're at this 50%, a key selling level here. So I'm just going to get rid of the 38.2, so we don't normally look at that. So yeah, on this fib setup, I mean, if you flip it to the weekly, that has a big swing move there, a clear high. And on the daily chart, it's the high of the daily chart. So from that high there to the lows, we are now resting off this 50% Fibonacci retracement. So in terms of any selling level, you can see that sellers have already come in at this level pretty much to the pip at the 1.3135. But the next area of support on the daily chart will be this 200-day moving average. So if we do start to sell off significantly over these next few days, then keep an eye out on that 200-day moving average there. In terms of shorter term charts, let's have a look at the 4 hour. We've got this clear uptrend here, which is still in play, and we're now, I mean, we really are bouncing very aggressively off this, and it looks like it just does want to come down and do some sort of retracement. It is looking very, very toppy. For very short term players, if you want to buy dips, then I mean, you can be looking at all these sort of low spikes here and drawing fibs from the lows to the highs. This will be a fib most probably looked at, from the lows to the high there. If you want to get in, if you're a very aggressive buyer and you're looking for sort of a dip buying opportunity, then the 50% round there comes in at one spot, 30.13. But in my opinion, it does look like it wants to have some sort of healthier retracement. And you can see it's already starting to happen on this Monday morning. So interesting chart. Also, we've got this 55 bar moving average on the 4 hour, which supported quite well around here. But I'd always keep the bigger picture in mind. Yes, it is looking bullish on a lot of the charts in terms of a longer term perspective, but retracements do happen. So you have to keep that in mind. And if you're looking to buy, then most people will be looking to buy at more on a healthier retracement. Okay, let's have a look at the cable chart. In terms of this weekly cable chart, I'm still very, very bullish with the this triangular pattern on this cable chart here. This sort of symmetrical triangle. That's still in play. We're now broken above the 100-week moving average as well. So I mean, in terms of the real bigger perspective, we won't spend too much time on it. That's what I'm focusing on. That's just pure triangular formation, looking like it wants to come up and test this top side here. In terms of the daily, you now see that we're starting to approach key resistance here. This key spike high up here at around the 1.6280 level. The last sort of 3 daily candles have been quite toppy, very similar to Euro really. I mean, how aggressive has it been on this daily chart? Look at all those green candles, a very aggressive action. That was notably due to the Fed last week announcing their further quantitative easing measures. So we've seen a weak dollar throughout. But of course, as I've been saying, would not be surprised if we had some sort of retracement. I mean, it's a very similar chart, this cable to the euro. I mean, on the shorter time frame, we've got the trend line supports here, and it looks like it wants to come down and test this trend line support. So if you are looking for buying opportunities, then my personal preference would be to wait for a retracement down to the trend line support and get in on that. And then also you can look at the fibs, very, very similar to euro really. And I mean, also, I mean, this is the 1 hour chart. Look at that 55 hour moving average there. 1, 2, 3 sort of spikes there. It's been acting as very, very good support. I mean, you could also draw a new trend line from there to there, and that kind of coincides with that 55 hour moving average. So you can see how you can get these confluence points. So I mean, if you want to be a more aggressive buyer, you can look to buy off that trend line support. But if you want to look for a healthy retracement, if you're looking at the bigger picture, then you can look for the other trend line supports. I mean, that 4 hour chart looks very, very clear. They've got 2 clear trend line supports. It's looking like it does want to retrace, but very, very aggressive bullish action on all time frames there on euro and cable. Let's have a look at dollar Swiss. Key things on dollar Swiss. I mean, this is the daily chart. We are in an uptrend here. We have had sell-off. I mean, in the sort of last few weeks, we have had an aggressive sell-off, but it's looking like it is one to bounce now. And this is the thing: after aggressive sell-offs, the retracements do happen. So I mean, if you're getting 5 daily candles in a row, the odds are for retracement. You have to keep that in mind, really. And in terms of fib setups, on the daily chart, like we drew on euro. I mean, remember we've been speaking about euro and euro dollar and dollar Swiss been doing a very opposite thing. Literally, their charts have purely been mirroring each other throughout the year. And you can see on euro dollar, if we go back to that daily chart, we drew a fib from the highs of the daily chart to the lows, and bang, we got that bounce off the 50% Fibonacci retracement. If you flip that chart upside down, On the daily chart on dollar Swiss, you draw the fib from the lows of the chart to the highs, and surprise, surprise, we are also bouncing off of this 50% Fibonacci retracement. Look at that clear action there. So yeah, I mean, it could quite easily trend upwards throughout the week on dollar Swiss, and similar to euro, it could trend downwards throughout the week due to the fact that it has been due retracement. So very interesting chart. If we do start to get a bounce up on this daily chart on dollar Swiss, then you've got that 200-day moving average, which acted as resistance there. You see that to the pip there. That 200-day moving average comes in at 0.9412. Let's have a look at dollar yen. Dollar yen has been a pretty boring chart, it must be said. In terms of the daily chart, we had that key support there. It did break below, and now we're back above it. In terms of the trendline support, you have to keep that in mind on that daily chart. We are still in where you could say some sort of uptrend, but not a massive amount of uptrend. But we are. I mean, that trendline support is holding. So if you're looking for buying sort of opportunities, you can flip to the 1 hour chart or the 4 hour. And draw a fib from the lows, that recent low to the high there, look for any sort of bounces. But I personally think there's more interesting charts out there. I mean, in terms of the short term, we've got that trendline resistance from down there as well, so keep an eye on that. If we do get a bounce towards the upside, then keep an eye on that trendline resistance. Okay, that's all today for the charts. Let's have a little quick look at the Forex calendar. What we've got coming out today, nothing, no high impact news today. Tomorrow we have UK CPI data at 9:30. At 10 AM we have German ZEW economic sentiment. We have the BOE inflation letter tomorrow, so that's key high impact news there. On Wednesday we have some important Japanese data overnight. We have their overnight core rate and monetary policy statement, and BOJ press conference. At 9:30 we have some more UK news there with the MPC meeting minutes. 9:30 at 1:30 UK time we have the US building permits expected at 0.79 million. At 3 o'clock we have US existing home sales. On Thursday we have quite a lot of PMIs out at 8 PM. Yes, it's not high impact, but it is medium impact news, and if they are, I mean, from many countries there, so if they're either all good then they can push that year up, or if they're all bad then they could push it down. The main PMI number is the German flash manufacturing one at 8:30, and at the same time the flash services PMI comes out at the same time. At 9:30 we have UK retail sales month on month, forecasted at a poor minus 0.4% from the previous 0.3%, and no specific time, but we do have a Spanish 10-year bond auction. They're always key in focus at the minute, especially with Spain and Greece in the headline of all the news at the minute. 1:30 have the weekly US jobless claims forecast at 373,000. At 3 o'clock with the US Philly Fed manufacturing index, that's a key bit of data there. And at 5 PM we have ECB President Draghi, so keep an eye on that. So there's a lot of data out there on Thursday. And on Friday, quite a quiet day, but the main bit of data out on Friday is the UK public sector net borrowing figures, forecasted at 13 billion from previous minus 1.8 billion, so big increase in the net borrowing numbers forecasted there. Okay, that's all for today. I hope you enjoyed this video. Have a great week trading, and I'll catch you next week. Thanks for listening.